This is Asia Trade. I'm Shery in Tokyo. The top stories this hour. Asian stocks set to open higher after Wall Street staged a comeback with a revival in the AI trade. Oil also steadying as Iran and Israel agree to ease strikes. OpenAI files confidentially for an IPO as it looks to join rivals tapping public markets to fund ambitious growth plans. Meanwhile, SpaceX's listing is set to be well oversubscribed. Also ahead, Apple unveils its AI reboot in a bid to set the stage for its new devices.
I'm Haidi, Stroud-Watts in Sydney. Take a look at the setup for trading across Asia. We are seeing that relief rally set to play out, particularly when it comes to the chip names, the AI-related names that, of course, suffered so badly in the Monday session. Having said that, though, yes, we did see the Kospi crashing into the close yesterday, down by over 8%, adding to that over 7% decline in the Friday session. But still, to put that into context, this is still a market that is higher by 80% when you take into the broader context. So there could still be further to fall when it comes to that year-to-date gains that we've seen for the Korean stock market. There have been concerns about that broader sort of cross-asset contagion as well when it comes to the won, when it comes to the broader economy, particularly in the context of how much of these leverage bets and margin lending has been involved in the ramp-up in this rally. But we are looking like a recovery day as the dip buyers came back in, as many had speculated. Take a look at where we saw last trade when it comes to US stocks, up by 0.3%. And it was really these chip stocks, that revival in the AI trade after the plunge. Renewed enthusiasm is what we're talking about. Chicago Nikkei futures looking a little bit tepid at this point, but dollar yen still holding above that 160 level. Switch out the board to take a look at commodities and oil in particular. Of course, we do have some of that relief at least being assigned to from this idea that Iran and Israel are pledging to ease these strikes that have threatened the ongoing peace talks in the Middle East. A lot of people are starting to look a little bit more optimistic as we see President Trump continuing to try and work towards some sort of compromise between the two sides. Of course, still very far when it comes to some of these key issues to do with Lebanon, to do with nuclear ambitions. Brent crude at the moment in that last trade holding higher by 1.25%, but you see that respite being shown in New York traded crude pretty much flat at the moment. Not a whole lot of haven demand for gold, I should say, either. That's trading flat. Australia was away for the King's birthday long weekend. ASX comes back online in the next hour and we'll have a little bit of catch up to do. Likely to see some upside when it comes to those energy names. Well, OpenAI has filed confidentially for an IPO, joining its rivals in a race to tap public markets to fund its growth plans. A potential listing could come by the end of this year. Bloomberg's US Deals team editor, Michael Haidi, joins us now for more. So this has been kind of a race to the first mover advantage, right? What are we hearing from OpenAI about its plans now?
Right. Another week, another multi-billion plan for an IPO of an AI company, it seems. Yes, the race is on against Anthropic. What OpenAI is saying today is simply that they announced that they had filed confidentially for an IPO today, or they announced it today because they thought it was going to leak anyway, so they put that out there. Bloomberg is reporting that the plan could be for a listing as soon as later in the fall in the U.S. this year. The announcement notably says that they have not decided on timing, that the company is perhaps doing things which might be better done as a private company for a while, and the decision on that will come later.
You mentioned that this was going to be another multi-billion-dollar IPO. How much could it realistically raise?
That's a very good question. Obviously, this is very speculative at this point. The one thing we do know is that in its last funding round, OpenAI was valued at $852 billion. That's a lot of money. If you think about sort of a rough gauge of anywhere from, say, 2% to 5% of a valuation being raised, that adds up pretty quickly. We'll see how it goes. Obviously, there's a lot of questions between now and then. The process, of course, is that the confidential filing is submitted to the SEC, and then there's the process of review. Regulators get back to the company and make changes, perhaps, and then there's a flip public and of the plans, and that's when the sort of intent really becomes clear, and details like that will become clear later.
We talked about this being a race, right? And the end of the year has been touted as potentially the time frame. Is it a race with Anthropic? Is there enough investor interest for both? Is there enough market depth, given we've seen what can happen when it comes to sentiment for AI just over a couple of days?
Right. That's a key question, of course. And don't forget SpaceX, which, of course, is in some ways primarily a AI company now with XAI. So that's an important one to keep in mind. Just how much money is there out there to invest in AI in general? The appetite so far seems to be insatiable. There are a lot of people saying, of course, that it's not bottomless. The performance of stock market, of tech stocks, especially last week on Friday, and a little bit of a rebound today, indicates that there is not 100% certainty of how these things go. I think with Anthropic specifically, which is somewhat parallel, it's Claude versus ChatGPT, that there will be a question of the company that goes first, of course, will have more risk. They'll be the first one to test the waters, but they'll also be first at the investor pool and perhaps get more attention, while the second may have more certainty as to what to expect when they go public.
Yeah, I mean, but the interest has been amazing, right? Whether it's OpenAI or SpaceX, for example. For SpaceX, we're now hearing that in South Korea, retail is already overallocated. What does this tell us about the demand out there and the interest when it comes to these huge, massive IPOs?
Right. One thing SpaceX is doing, of course, is they've set aside about 30% of their shares for retail investors. That's individuals. That's something other than institutional funds. That is a very large proportion. It shows that, certainly Elon Musk and SpaceX have captured the public imagination, and investors in particular. OpenAI and I think Anthropic will also have a similar broad interest that will go beyond most IPOs, that they will be able to draw in those individual investors and perhaps have that same oversubscription as well. And that demand, of course, most importantly for those investors, means that when the stocks start trading, you can be assured that there'll be some sort of additional demand to buy up shares, and there'll be that first day pop that anybody putting on an IPO wants to some degree.
Bloomberg's U.S. Deals team editor Michael Haidi there with the latest on OpenAI and, of course, all of the fundraising that we're seeing around artificial intelligence. And that's been really the key question in markets these days. Can funding keep up? Of course, we have seen that dip when it came to that tech sell-off in recent days. But Wall Street now staging a comeback. Those dip buyers emerging overnight, chip makers pacing gains. Is there a renewed enthusiasm over artificial intelligence after the biggest sell-off since 2020? Let's bring in our markets reporter Anthony Stevens and our chief Asia FX and rates correspondent Ruth Carson. Anthony, let me start with you. And how does this set us up for the market opens across Asia?
We discussed yesterday about a risk management exercise, and that was very brutal in Asia. And it ran its course pretty much into the close after we all went home. We saw a very sharp markdown in the close in Korea, in Hong Kong, and a lot of that had to do with retail positioning and kind of the aggressive products that they traded, especially the leveraged ETFs in Korea. You saw volume spike there. It had a very knock-on impact on vol. And then as soon as we closed, Korean futures started to bounce on the back of positive news flow from the tech sector. Jensen Huang in particular signing a rash of agreements in Korea. And the US markets actually loved the sight of that. And they got further positive news from Intel and Google's tie-up. So into the US session, tech equities were actually quite well supported by fundamental news. And that drew a line around some of the retail unwinding around positioning. What was interesting to me as well is even though US yields continue to tick up as a rate hike continues to be priced, equities were a little bit more relaxed this time around. And I think one of the drivers of that is there was this washout of the more speculative positions. Now the debate goes on into our session on which corners of the market are resilient and have true fundamental support versus the corners of the market that are purely speculative. And I suspect that bifurcation will continue into the risk management event that is the US CPI on Wednesday night.
Ruth, when it comes to the sell-off in Korea, there's a lot of worries about cross-asset contagion, right? Particularly when it comes to the won. We saw the authorities coming out and that helped somewhat. Is that sustainable, or is the path really towards further downside depreciation risks for the won?
I think the Korean authorities did a fantastic job of that. Sorry.
Yeah, I was just about to say, when it comes to the won and multi-asset contagion there, there's definitely a risk. The key question for a lot of macro traders out there is what's actually happening with the won. Even though the Kospi has obviously fallen off, has sold off in the past couple of days, the AI rally is still a firm theme, and yet the won is how weak it is. But that said, yes, authorities have come out swinging. They are saying that they're targeting speculative investors. It is a warning shot, but remember, the won is still very much beholden to a couple of things. One, sentiment flow. It is very much a risk-on, risk-off currency. And also the fact that option traders are signalling more weakness ahead. It is about 15.26 at the moment. There's about a 50% chance options traders are signalling that the currency would trade at around 1,600 by year-end. So definitely, a currency that is in the selling crosshairs, stress set to continue.
And we do have breaking news at the moment when it comes to the South Korean first quarter GDP, of course, a bit backwards looking and only capturing just a few days of the start of the Iran war. But right now we're seeing the first quarter growth expand at 3.8% year on year, revised upwards from 3.6% increase. So manufacturing growth of 3.9%, construction growth of more than 2%. So we continue to see that pace of growth holding up, perhaps even a little bit of an increase. But it's really, Ruth, when it comes to that dichotomy in the South Korean economy about where the currency has gone, despite, of course, the economy being held up by all of these tech exports, especially around semiconductors, why we've been racking our brains trying to understand the weakness in the currency.
Yeah, absolutely. And you're absolutely right to point out that you've got the AI boom. The economy is actually growing. Investors are betting on BOK hikes as well. So there is growth. There is that growth story there. So what's actually happening with the won? Some people have tied it back also to the fact that foreigners have been selling. They've been selling, AI stocks and the Samsungs and all that. So there's capital flow, that is going out of Korea, and that's weighing. There's also, talk about exporters keeping some of their dollars offshore and not converting it back to the won. So all of this is weighing on the currency, despite some of the strong numbers that we're seeing when it comes to economic growth.
Anthony, the backdrop when it comes to AI might be an issue of, shifting momentum and maybe questions of evaluations, but the fundamentals when it comes to the US economy, Fed expectations hasn't changed. Does that mean for assets like in the EM space, we're going to see continued challenges?
We will really see a bifurcation of EM expectations. Now, EM as an asset class is starting to look like a too broad a term. Ruth mentioned foreign flows into Korea, right? One of the most interesting things we saw yesterday is amidst the sell-off in Korea, foreigners turned net buyers after almost a 20-day selling streak. And that's because they believe in the valuation support, the fundamental support of the Korean market. Very similar to Taiwan, very quick to bounce back. Markets like Indonesia and India, though, you see, even though the moves can be less drastic and the retail sentiment is obviously not there, you see a steady drip out of those markets, right? ASEAN in particular has seen several week-long stretches of foreign selling. And this bifurcation is basically AI and oil. Without an AI catalyst, you're at the whim of the Iran conflict, and you cannot punch out of it as an EM country. So this split is an ongoing thing in markets, and these smaller markets with lesser growth drivers, they're really struggling.
Bloomberg's markets reporter Anthony Stevens there, also our Chief Asia FX and Rates correspondent Ruth Carson, setting us up for another interesting trading day as we particularly continue to look ahead to what looks like a pretty strong recovery for trading in Korean markets. Of course, we had that 8% decline in the Monday session, adding to that 7.4% we saw on Friday. But still, this is a market that is still up around 80% year to date. More ahead on the Asia trade. This is Bloomberg.
Oil is holding steady after Iran and Israel agreed to ease strikes after flare-up in violence threatened to derail peace negotiations. President Trump now says the U.S. will declare total victory in the war with Iran over the next 2 weeks. Let's bring in Bloomberg senior editor Derek Wallbank for more on this. And Derek, we know that President Trump is quite used to this timeline of a couple of weeks, but how feasible is this actually to happen when we do have still many sticking points in the negotiations?
Well, Shery, that's the question, isn't it? We've heard from the president a lot of upbeat and hopeful rhetoric about where this conflict is likely to go, but we've heard that really for more than a month now. So it's not quite clear what the conditions are yet for actually getting fully to the other side of this conflict. There had been some hopes as soon as last week that we could have been going there. Then we got an increase in hostilities, especially over the weekend, a back and forth between Iran and Israel, and then that seems to now be again, with a sort of like fragile bowl put over it, trying to keep that contained. Look, where we are right now is that both sides are sort of sat there at the ready, saying we're not going to fire unless you fire on us, but we're ready to fire if you do fire on us. And that's a very fragile period, especially when you consider across this whole region, the presence of groups that are not technically your adversary, but aligned with your adversary, if you sort of think of it that way. For example, last week we had news of Israel and Lebanon saying that they would be fine with a ceasefire as long as Hezbollah says that they would honor it. Hezbollah, Iran-backed, says, no, we're not going to do that, and conflagration erupts. Now, all of this gets to a larger point, which is that this conflict has been very, very difficult for President Trump, who launched it alongside Israel, to find a way out of. You've got the elevated gas prices that aren't necessarily going up right at the minute in terms of overall oil prices. They're not necessarily going up huge again today, but they are staying up at that elevated position that we've seen them on. So that becomes a difficulty here, even as Donald Trump tries to talk positively about the economy and other facets.
Yeah, it's interesting, right? Because we heard at this virtual campaign rally, President Trump saying he's promising total victory in the next 2 weeks. It's not really clear what this means, but he's promising that oil prices will then come down. His approval rating continues to sink, right? I think we're at the lowest in either of his presidencies at the moment. Is there a path to recovery for the party broadly going into midterms?
Well, yeah, Heidi, I think that's one of the key pressure points that a lot of people are watching. Certainly, I think the Iranians are watching on this, is those November midterm elections. Now, Donald Trump's party is in a reasonably strong position. If you look at it sort of structurally, they hold control of the presidency, of the House, of the Senate. If you look at the Senate map, they're defending Republican-held seats. So Democrats actually, it's not just enough for them to win. They have to win a little bit big in order to take over either the House or the Senate, especially the Senate. So that's sort of firmer structural ground. But as you quite rightly note, the approval ratings are down. If you look at really the big issue of the economy, the approval ratings are down more on the economy. And that's a combination of the gas prices as well as inflation and a couple of other things, food prices, some other things of that nature that have kind of bedeviled this White House that's tried to figure out a way. Donald Trump has tried to get the Fed to lower rates. He's tried to do other sorts of things to try and goose the economy. He keeps pointing to the stock market where equities do continue to kind of go up. But overall, the handling of the economy, 2/3 of voters in the U.S. right now saying he's not doing that good of a job. Those numbers really will need to turn around in order for Republicans to do well in the midterms.
Bloomberg senior editor Derek Wallbank there in San Francisco as we continue to monitor the latest on the geopolitical situation in the Middle East. But at the moment, we are seeing some respite when it comes to crude prices. Take a look at what we're sitting as we see WTI really trading sideways at the moment. We continue to monitor the halting of hostilities between Israel and Iran that, of course, deeply risks these ongoing peace talks. That escalation of violence, though, really just happened yesterday, and that fragile ceasefire remains in place but still very very much at the whims of all of these parties. We're seeing copper up by about 0.7%, and also a little bit of upside there when it comes to trading in iron ore. We, of course, have been watching that on account of some of the continued headwinds for the Chinese economy. But when it comes to the Middle East conflict impact, Vale, for one, sees no evidence of war-related demand destruction when it comes to the global metals market, even as the Iran conflict disrupts raw material flows. CEO Gustavo Pimenta says the world's top iron ore producer is seeing massive demand from its global customers.
The amount of demand is super constructive. It's historical for us, I think, across all the critical minerals we are seeing, and a very strong support from clients all over the world, from countries in terms of looking for security of supply. Iron ore continues to be strong. If you look at copper, nickel, so across the board we are seeing tremendous amount of demand for all of the mining that we produce.
The bulk of your customers typically come from China. Have you seen more interest recently from the United States?
We are. China continues to be a strong market for us, very relevant for everything we do, but we are seeing growth outside China. We are seeing growth in Southeast Asia, we are seeing growth in the US, Europe. So there is a diversification going on these days, with other markets looking to amplify their access to critical minerals.
People talk about a commodity supercycle. Iron ore hasn't participated as much in terms of the price gains, and there has been a sort of plateauing in demand from China. Where are the growth opportunities specifically when it comes to iron ore?
So we continue to be very optimistic about iron ore. If we step back and look at the overall demand, we have population growth, we have industrialization, we have other markets growing. Certainly China probably has plateaued and reached their overall peak in terms of production. They are doing more than 1 billion tons of crude steel production annually. We think they will continue to be at that level, but we are seeing growth in Southeast Asia. India is growing substantially. We're expecting India to double the crude steel production in the next 10 years. Even the US is growing. So we are seeing more demand outside China. China will continue to be the key market for all of us, but we are seeing greater demand in other markets as well.
That was Vale CEO Gustavo Pimenta there. And if you missed any part of that conversation, check out the Bloomberg Video Hub. Subscribers can explore live streaming, news and interviews, all our Bloomberg TV shows as well, documentaries, reported analysis, and so much more. Bloomberg.com/videos. This is Bloomberg. Here are some of the top global headlines that we're following. A U.S. judge has struck down President Trump's $100,000 fee for H-1B visa applications, calling it an unlawful tax. The judge sided with California and 19 other states a suit to block the fee. The ruling is a reprieve for tech companies that rely on skilled foreign workers. The administration says it plans to appeal the decision. The Pentagon has accused some of China's biggest companies of supporting the Chinese military, including Alibaba, Baidu, and BYD. They were included in an update to the Defense Department's list after they were withdrawn from a previous version without explanation. At least 35 people have been killed after a 7.8 magnitude earthquake rocked the Philippines on Monday. It was the most powerful quake to hit the nation since 1976. And tens of thousands of people have been displaced on the southern island of Mindanao. The government has pledged funds for affected regions and suspended classes across Mindanao until further notice. This is Bloomberg. Yeah, take a look at how we're setting up for the market opens in South Korea after that plunge of more than 8% in the last trading session. Of course, a circuit breaker was triggered yesterday, but take a look. We are seeing a little bit of a rebound when it comes to the future space. And this, of course, as we got a positive lead in, Haidi, with chip makers leading the rebound in the Wall Street session as well. The Philadelphia Semiconductor Index jumping more than 5%. Morgan Stanley's Mike Wilson calling last week's decline a healthy reset. Nvidia's Jensen Huang also calling this global tech sell-off a buying opportunity. So perhaps we could be setting for some gains in today's session.
The reset theme is really interesting, right? Because it also suggests that this is not going to be a one-way trade from here onwards, particularly, Shery, as we keep talking about the impact of these mega tech IPOs. We have the appetite when it comes to SpaceX coming up. We have Anthropic. We have the latest when it comes to OpenAI, as well as the Google fundraising. So all of this really threatening to suck investor interest, test the depths of these markets and liquidity as well, at a time when we know that the Fed is likely to hike. So we've got that sort of tightening scenario, as well as these ongoing Middle East tensions. When it comes to that latest point, of course, we're seeing a little bit of respite in these markets. We hear from President Trump speaking at that virtual rally, saying that he thinks victory is close. He's talking about oil prices coming down in the next few weeks as soon as that victory is secured. But realistically, we still have the parties really gathered for this very, very tenuous ceasefire. The hostilities from yesterday have at least ceased for today, but that ceasefire, the longevity of peace, is still very much up for debate. This is a picture, though. We're seeing a little bit of peace, if you will, when it comes to trading in New York. Traded crude there up just about 0.1%. The Nikkei 225 flipping to positive when it comes to futures expectations there. S&P futures still looking a little bit soft, but it is really about Korea, isn't it, Shery? Because after that 8+ decline yesterday, the 7% plus decline on Friday, it does look like we're going to see some appetite for dip buying.
Yeah, let's actually discuss all of this with Dayeon Hong, APAC rates and FX strategist at Natixis. Dayeon, good to have you with us because, I mean, we had seen the massive sell-off in equities in South Korea, but the Korean won still pretty resilient. Authorities, of course, played a huge part here. How sustainable is the strength in the currency when up until now, we have seen that massive pressure coming on the Korean won, despite, of course, his rally in equities?
Yeah, so government came out with all sorts of measures yesterday, and MPS also seems to have done some hedging, and it has allowed the Korean won to appreciate against dollar to 15.30 yesterday. But I don't think that's going to be enough for now, considering that how huge the equity outflows for foreigners have been so far. In the month of May, we've seen about $30 billion of outflows from the Kospi alone, and from June onwards, month to date, we've seen another 12 billion outflows from foreigners. These are really driven by the rebalancing needs. And as we approach the quarter end in June, I think such rebalancing will still happen. And this will be continue to be a main driver for the depreciation pressure of Korean won.
And it's interesting because we also have that immense pressure on the bond space, yields multi-year highs at a time when, of course, the rates market signals that potentially the BOK should be hiking rates at the moment. Where are we headed from here?
I think the BOK will start hiking in the next meeting, but I think there's more to go. We've got weak currency, higher oil prices, and these are not good for inflation, obviously, in Korea. We've seen in the month of May, headline inflation rise to 3.1%. And the Governor Shin, at the last meeting at the press conference, he specifically mentioned the living cost inflation, which recorded at 3.3%, which is even higher. So to anchor that inflation expectations, I think the central bank needs to come out and hike more, tighten the monetary policy, given the high growth rate, high inflation, and weak currency.
When you take a look at these shifting expectations for central bank tightening from the Fed, where do you see the outsized impact when it comes to regional currency assets?
Broadly in Asia, I think we will see more hikes. And what I've been really focusing on is that inflation numbers that we see in Asia Some of that is capped by the oil price subsidies that's provided by the government. And so we're not seeing the full impact of elevated oil prices into CPI numbers at the moment. So we've got that capped, and we may see a second round impact, particularly in Korea. We have also need to consider the wealth effect of high equity indices, and also some of the bonuses that we've been talking about out of Samsung and Hynix, but it also applies to other industries like financials, for example, that had huge earnings. I think that will have an impact on wage growth, and so this will all have a push kind of impact on the rates, and the central banks will have to tighten further to anchor that inflation expectations.
You know, speaking of an anchor, has the sort of time passed when we've continued to use the yuan as an EM anchor? Do you think it's now sort of more of an idiosyncratic currency story, particularly as we see authorities there being a little bit more comfortable with the levels that we're seeing in the yuan?
I think China has really been a shelter out of the whole EM Asia region. And we see a different story in China, where we see weak growth and benign inflation. The consumption in China is not really picking up. And so China is really a shelter story out of EM Asia region. And Korea, Taiwan, and obviously Japan as well is really impacted by the whole AI theme and growth coming out of that tech industry. So I think we have to look at China and other parts of EM Asia a bit differently. I don't really see inflation or growth picking up anytime soon in China. In terms of yuan, I think the authorities are comfortable with the currency being quite stable there, whereas a lot of the other parts of EM Asia are really driven by the broader dollar movement in relation to what's happening in Iran and high energy prices.
I was going to say, how much of the moves and the bifurcation that we're seeing in emerging market currencies and rates is because of what's happening around Iran and also just the AI theme? We have seen, of course, a lot of these markets, perhaps in Southeast Asia, also India, that don't necessarily have that much exposure to the tech theme.
I think Southeast Asia, some of the countries are in a very vulnerable place where they don't participate in this AI theme, but some of these countries are also oil importers. So these are some of the vulnerable currencies, and also it manifests in the bond market as well. Korea is an oil importer, but because we've seen such an increase in chip export, we've seen actually trade surplus increase in Korea. So we're seeing a bit of, a set-off there, but it's really driven by the capital flows as well, not just the trade balance, but capital flows really driving the currencies in some of these markets, particularly in Korea, that's impacting the currency. So it's both oil and some of the capital flows that we are seeing in these markets.
Dayeon, really great to have you with us. Dayeon Huang, who's an APAC rates and FX strategist at Natixis. More ahead here on the Asia Trade. This is Bloomberg. All sources say SpaceX's IPO is well oversubscribed, with multiple institutional investors placing orders for about $10 billion or more of shares. They say the company will stop taking orders on Wednesday after the market close. SpaceX could raise some $75 billion and plans to use the proceeds to expand its AI and rocket infrastructure. Bloomberg's Ed Ludlow explains.
Ignition. Elon Musk wants to build the infrastructure for AI in space, and he's asking investors to help pay for it. The rocket, satellite, and now AI company wants to raise around $75 billion in what will be the largest IPO in history.
SpaceX is probably our greatest, commercial space company, hands down.
It will enable the next iteration of what we want to see as the space industry continues to grow.
This isn't just a space story anymore. After folding in Musk's AI startup xAI earlier this year, investors buying into SpaceX are also buying into the future potential of Grok AI models and Musk's vision for massive computing infrastructure. That ambition comes with a hefty price tag. New filings show SpaceX's AI business, as in xAI, lost nearly $6 billion last year and billions at the start of this year as money poured into computing power and infrastructure to compete with OpenAI and Anthropic. Still, SpaceX has major advantages. Starlink has become a powerful cash generator through its satellite internet business, while the company's launch operations continue to secure billions in government and private contracts.
What people need to realize about this company is it isn't just a little bit ahead of the entire launch industry on planet Earth. It's orders of magnitude ahead.
And now, Wall Street wants in. Goldman Sachs, Morgan Stanley, and JP Morgan leading more than 20 banks working on the offering. And Musk negotiated record low fees. But the IPO also raises big questions like whether investors are comfortable betting not just on Musk's original vision of making humanity a multiplanetary species and getting to Mars, but on a future combining rockets, AI, and social media into one sprawling empire.
And so what we're buying is the next, the global economy, 2.0 and 3.0 as we look at buying into SpaceX.
If that happens, SpaceX could redefine what the modern public company looks like on Earth and in space.
Yeah. SpaceX's IPO is seen as a bet on Musk's vision of an industrial empire, one that spans hardware, software, and AI. That's the focus of our Big Take today. And Bloomberg senior reporter Dana Hall joins us now. Dana, the boundaries of all of these Elon Musk's companies are pretty blurry. What's the risk?
Well, the risk for investors is understanding what the true valuation of SpaceX is. If you think of it, it's a little bit like nesting dolls, where Elon's companies, they have acquired each other, they help each other, they support each other, there are financial transactions. And, if you just think about the past couple of years, Elon, bought Twitter, renamed it X, founded a startup called xAI, then xAI acquired X, then SpaceX acquired xAI. So it's like they're all kind of one and the same. And then now the big question, of course, is SpaceX going to get to such a valuation that it will in turn acquire Tesla? That's a question on a lot of people's minds.
There's also some concerns about governance, right, when it comes to Elon Musk?
Yeah, the governance concerns have been there for quite a while, just because his board is, very much loyalists who have been friends with him for quite a long time. Now that SpaceX is planning to IPO, they are expanding their board, and they have nominated, or the person joining the board is Ira Ehrenpreis, who has been on the Tesla board for quite some time. So it's very much all in the family. It's a lot of people that have been around Elon for quite some time, and that is both what attracts investors to him and the kind of lean team around him, as well as what raises a lot of concerns, particularly for union-affiliated pension funds and public funds that are just feel like there's not enough arm's length transactions.
Yeah, the Danish pension fund calling SpaceX grossly overvalued. So what are we watching next when it comes to this massive IPO?
Well, I think it'll just be super interesting to see what the trading is like in the first few weeks. You have a lot of friends and family and longtime employees who are going to strike it rich. It's going to be a big payoff for them, rewarding them for their loyalty. And then there's going to be maybe some turbulence as we try to figure out, is this company worth $1.8 trillion, which is the anticipated valuation? Is it worth more? Is it worth less? Like, how volatile will the trading be?
Are we still sort of talking about the political relationships that Elon Musk and the company have at this point?
Not really. I mean, obviously, here in the United States, Musk was a special advisor to President Trump. He has since left that role, but he is still very close to the president. He is a big player in the elections. He uses not just his money, but his megaphone on X to put his thumb on the scale of various political events, both in the United States and abroad. I think people are waiting to see what kind of role he will play in the midterm elections here in the U.S. But in terms of the SpaceX IPO, I don't think people see that as a downside. Whatever brand reputation Tesla suffered has rebounded quite a bit. Sales of the vehicles are doing much better in Europe, and Tesla is still the most valuable automaker in the world right now.
Our Bloomberg senior reporter covering Tesla and Elon Musk. Dana Hull there in San Francisco. And subscribers can get more on that SpaceX IPO betting on the Musk empire. In today's Big Take, for terminal clients, the function is NI Big Take. It's also available on Bloomberg.com. Let's get you the latest from the corporate front. Intel shares closed higher after reports that Google will rely on it for more than 3 million specialized AI chips in 2028. Became apparent. According to the information, Google will tap Intel to manufacture some of its TPUs after months of testing the chipmaker's technology. This comes as TSMC struggles to keep up with demand for its manufacturing capacity. Tencent said to be looking to raise around $3 billion in a dual-currency bond offering that could be priced as early as Tuesday. Sources say the company has secured regulatory approval to issue as much as $4.5 billion in offshore debt. If successfully priced, the deal would be Tencent's first dollar bond issuance since 2021 and its second ever dim sum bond sale. Amazon has sold 14 billion Canadian dollars of high-grade bonds. It is the largest corporate debt offering on record in the currency. Sources say investors have placed about 28 billion Canadian dollars of orders for the offering. It comes as the cloud computing giants at the center of the AI boom scour global debt markets for funding as they plan to make huge investments in data centers. A new report from Bain suggests that global buyout deal value fell to $20 billion in the first quarter as fewer large deals were completed. Valuations of software companies fell about 8% in the first quarter, compared with a decline of 0.3% for all other sectors. Bain says private equity firms need to adjust to the AI threat by figuring out how to protect existing investments. More ahead here on the Asia Trade. This is Bloomberg.
At Apple, creating the best products in the world to deliver experiences that enrich people's lives has always been our North Star. It's been the honor of a lifetime to help advance that mission with teams whose creativity, care, and conviction continue to make a lasting difference in people's lives.
Apple CEO Tim Cook there delivering the closing remarks at the company's Worldwide Developers Conference. Apple used the event to lay the foundation for a new generation of products, making the case that it can overcome years of snags to compete in the AI era. But the event received mixed reviews, with its shares closing lower in the U.S. For more, let's bring in senior tech editor Nick Turner. So lots of skeptics out there when it comes to Apple's AI strategy. How much did the company achieve in perhaps fixing some of the latest AI shortcomings and also prepare for what's next?
Yeah, I think it's definitely made a lot of progress. I mean, you often have a situation where Apple does one of these presentations and the stock falls during it. And usually it's just because people generally have a good idea of what's going to be announced. And in this case, there weren't really any surprises. But it does seem like Apple took pains to show, hey, this technology really works. They had a situation 2 years ago where when they first unveiled Apple Intelligence and some of the features weren't ready, and they are really only coming out now 2 years later. So they really want to show to people that they have fixed the issues and they're on the right footing now.
So what was Siri AI like, and can we expect other AI-powered features from Apple?
Yeah, I mean, Siri is going to be able to do the things that we've been waiting for it to do for several years. That includes it can see what's on your screen and kind of react to it, which seems like a pretty basic thing, but I guess it was hard to perfect. It can go through your personal data like emails and calendar items, and it knows that context. And it also can kind of manipulate apps more precisely than before. So if you want an app to do something just using your voice, it can handle that, or it should be able to handle that. So those are the big things.
And what hardware updates can we expect later this year?
Yeah, I think that's where things will get interesting, because Apple is supposed to come out with its first foldable iPhone. And it's working on a bunch of other products that maybe we won't see quite that soon, but that will take advantage of Siri. That includes like a new smart home hub. They're working on a device that'll sit on your tabletop and move a screen around, like with a moving limb, essentially, which will feel sort of like human-like, I think, and really hopefully take advantage of this AI stuff.
Nick, the broader smartphone market has been challenged, especially with the memory chip shortage. What's it looking like for the rest of the year for Apple?
I think some of those things they just can't avoid. I mean, the overall market is going to be slow this year, and sure, they can come out with a folding phone and build some excitement that way, but you're talking about something that's a fairly niche product. So I think generally it's still going to be a tough market for both iPhones and smartphones in general. Apple can hope, as sort of a premium player, that it can do a little better than some of the other companies in the market, and so far it seems like that's how it's worked out.
Senior tech editor Nick Turner there, and tech will be in focus as we get trading underway in just the next 5 minutes or so, as we have Japan, Korea and also Australia coming back online after the long weekend. A little bit of catch up, or hopefully not too much catch down to do, given the extremity of the sell-off that we saw in the Monday session. But it does look like the positioning in Korean markets, according to futures, looking like we'll set up Asia for a very nice bounce there, largely correlated within those chip and AI names. This has been sort of categorized as opportunity for dip buying, a bit of a risk management event as sort of the momentum gets reset, maybe valuations gets a bit more of a consideration as well. But take a look at that. Korean futures up by just about 5% after an 8+% decline on Monday, a 7.4% decline on Friday. Still, a market that's up 80% year to date is not doing too badly at all. Australia also looking like we'll see some positive action at the start of trading. The market opens are next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens after a rebound on Wall Street. Haidi, we had those AI dip buyers jumping back into the markets, chip makers leading the gains, and even perhaps some easing of tensions around the U.S.-Iran war.
All is well again, Shery, at least for this session, I think, right? We've had quite a sell-off when it comes to Korea in particular,
Don't
but
jinx
at the
it,
same
Haidi.
time... It looks like we're setting up for a nice bounce, but it is that reminder that perhaps we'll have these, periodic resets of momentum, of looking at valuations, of looking at what the fundamentals are, right?
I mean, there's so much for the markets to consider, right? And we haven't even talked about the Fed, inflationary pressure, central bank decisions around the world. But take a look at how Japan is coming online. We had already seen 3 sessions of losses. We're talking about levels that we haven't seen in about 2 weeks or so when it comes to Japanese equities. When the Japanese yen is also stuck at that 160 level against the US dollar. And we are now seeing hedge funds being the most bearish about the Japanese currency since 2024. And that was the time when the yen broke above 161 for authorities to come back in full force and intervene in the markets. You can see the Nikkei opening higher, 0.9%. We're keeping an eye on, of course, the JGB space very closely because we have seen the downside pressure. We are headed towards a BOJ rate hike decision. Potentially could be a rate hike, although we've been surprised in the past. So we'll continue to monitor the latest developments around central banks. Of course, the Bank of Korea is also one that we're watching very closely. Take a look at how South Korea is opening. Inflationary pressures have also been felt across this economy, especially given the overheating of the business around semiconductors. And we have seen the massive fall in the cost speed of volatility, right? I mean, a plunge of more than 8%. triggering a circuit breaker in the previous session. We're seeing the Kospi now gaining almost 5% there. Weakness in the Korean won. The Korean won continues to be a little bit of an issue for the South Korean government because authorities have now signaled more forceful actions in the FX space. So we saw a little bit of a bounce in the previous session. It's now holding right now. We're 15.29. And you can see, at least when it comes to the semiconductor makers, a big upside for Samsung and SK Hynix, Haidi.
Yeah, and you were talking about one of the other factors, not just, of course, the recovery and sentiment on AI and some of the big IPOs and other deals that we're watching as well, but of course, the geopolitical front. We did hear from President Trump a little bit earlier, speaking at a virtual campaign rally, saying that victory is near when it comes to the US war against Iran, that oil prices will come down soon after that. But of course, not a great deal of detail. We know that these recent elevated hostilities have at least pared back, but that ceasefire remains very fragile, and the path to a longer-lasting peace remains quite unknown at this point. At that point, though, we are still seeing treasuries overnight really pairing declines, pulling the 2 yields back from more than a 15-month high. Those reports of the restored ceasefire between Israel and Iran easing that upward pressure when it comes to oil prices. Oil prices remain pretty sanguine. Brent crude coming online just up about 0.1%, very steadying there as we continue to watch those developments. I should point out Australia is playing a bit of catch down at the moment, given that it wasn't trading on what was a pretty terrible Monday session for Asian equities. It's down 1.3%, despite, of course, being more heavyweight in energy and commodities than much in the way of AI or tech-related stocks in this market. Let's get to our next guest, who says upcoming policy meetings, inflation releases, options expiries could trigger a period of volatility, resetting valuations and market momentum. Let's bring in Marc Franklin, who's the head of Asia Multi-Asset Solutions at Manulife Investment Management. So today might be a bit of respite and some opportunity for dip buyers to come back in. But do you think the Monday session is a reminder of what could perhaps be a new normal at a time when all of the uncertainties that you point to are still in play?
Good morning. After a very, very sharp rally over the last 2 months, it's inevitable that there will be a period of digestion, which is also characterized by a pickup in volatility. And as you mentioned as well, we've got a number of central bank meetings coming up and inflation data points, which could coalesce around that pickup in volatility as a result of the momentum that we've seen thus far. And one thing to call out is that if you see the major central banks either collectively raise rates or signal that rate hikes are potentially on the table in the case of the Fed, that will ultimately lead to a tightening of financial conditions, and investors will be forced to sort of revert back to fundamentals and try to ascertain which parts of the equity market still have potential upside, even if policy is no longer overall supportive.
You make a very good point about, even if sort of sentiment shifts on AI, the geopolitical situation remains fluid. The fundamentals when it comes to the US economy and what the Fed will do seem fairly set at this point. If you add on to that the sort of vacuuming effect of these big megatech IPOs, do you think the market is going to be challenged in the months to come?
Well, with respect to the large IPOs, they've been well telegraphed. And one potential aspect to the requirements to raise liquidity in order to fund participation is the extent to which they will go into indices quickly, because then passive money will have to rotate and recycle. We saw last week that there would be no fast tracking of the SpaceX IPO. And so in that sense, the pressure on passive exposures to markets to find room for inclusion in indices straight away subsides somewhat. But clearly institutional investors, but also retail investors, will be taking a very close look at those IPOs and may look to some of their year-to-date winners as a source of funding if indeed they're able to get allocations.
We heard that in South Korea, SpaceX IPO was the retail is already over-allocated at this point. When it comes to the volatility that we're seeing in South Korean assets, for example, will this just add to more, given also the fact that we have now single stock leveraged ETFs to contend with in that market where the concentration on Samsung and SK Hynix is so huge?
One of the things which the regulators probably missed an opportunity on was to head off and anticipate the very significant pickup in retail participation in call options, short-dated call options, to try to ride the rally, particularly in the semiconductor names. Now that retail have taken on a significant amount of margin exposure and leverage, it almost guarantees a pickup in volatility going forward. But again, reverting back to fundamentals, not just the Korean semiconductor names, but also other tech companies within the broader semiconductor complex are signaling that 2027 does not necessarily mark the conclusion in terms of the supply constraints of the wider industry. And assuming that demand continues to grow at a very fast clip, you're going to have a supply-demand mismatch and an elongation of this super cycle that we're seeing. So fundamentals still look very much intact. But from a market participation perspective, there are definitely signs of animal spirits kicking in here, which means that you're going to get two-way price action in large order as a regular feature in the coming weeks.
What stood out in the South Korean economy has also been the pressure on the Korean won, despite the fact that we are seeing these rallies elsewhere. Is this going to be a common trend across markets in Asia? For the likes of Japan, for example, the yen still under pressure, despite the fact that we are expecting the BOJ to continue normalizing and tightening policy. When you have strong U.S. economic data and potentially more hawkish turns also coming from the ECB, the Fed as well, is this just the way, the new normal for a lot of currencies across the region?
There are some cyclical as well as secular explanations. On the cyclical side, you're seeing foreign investors that are sitting on triple-digit gains in Korean equities exposure, looking to take some profit, which means they're effectively selling Korean won and they're repatriating that capital back into their base currency, typically US dollars. So that's putting some pressure on the currency. But the more secular theme really is we are in a global competition for capital flows, and that is an unspoken policy feature of the Trump administration, is to drive capital into US capital markets, and in some cases at the expense of overseas capital markets. And that is something that we expect to persist, certainly for the remainder of the current presidential term.
Marc, does China and Chinese assets remain a compelling alternative? The yuan is unusually strong at the moment, and authorities seem fairly comfortable with that. And there's also a parallel universe of AI companies and opportunities there.
We would distinguish between the mainland equity markets and the offshore Hong Kong equity markets. The market composition is quite different. I think on the mainland side, you're right to point out that the AI thematic is quite well expressed via the GEM index in Shenzhen. And you've got a number of nascent companies there which are making very significant technological strides. So from a thematic point of view, the mainland equity markets do offer that expression for investors. The other thing as well is we are seeing mainland retail investors engage more and more with local equity markets as well. And whilst we're not seeing elevated degrees of margin financing and volumes, the volumes are somewhat healthier than they have been over the last few years. So that's a sign that there is domestic interest in capital markets. With respect to Hong Kong, one of the issues there really is the concentration in real estate and banks. And of course, with interest rates, or at least the pricing of interest rates tightening somewhat, that creates a bit of a cost of capital pressure for those sectors in the economy. And I think the other thing as well is that in the case of Hong Kong equities, they've somewhat suffered, like a number of other Asian equity markets, by the sheer enthusiasm and interest in certain markets in Asia which have done extremely well, such as Korea and Taiwan. And India's been in the same boat as well. It's seen investors take exposure down in those markets in order to make room to build allocations in those markets that have got the strongest momentum. So Hong Kong, in that sense, is a bit more sensitive to that dynamic.
Marc Franklin, really good to get your views. Head of Asia Multi-Asset Solutions of Manulife Investment Management. As Marc mentioned, one of the hottest AI markets right now, South Korea, and the interest, of course, peaking. Take a look at some of the big movers in that session as we're seeing this big rebound when it comes to some of those tech names. The two biggest, Samsung, SK Hynix, of course, they account for about half of the Kospi turnover, more than half of the index weight. We're seeing that upside after losses of more than 4% for SK Hynix in the previous session, more than 7% for Samsung. Nvidia's CEO Jensen Huang, of course, meeting with the leadership of these two companies and calling the recent AI sell-off a buying opportunity. This is Bloomberg. Oil prices holding steady after Iran and Israel agreed to ease strikes after flare-up in violence threatened to derail peace negotiations. President Trump now says the U.S. will declare total victory over the next 2 weeks? Let's bring in Bloomberg's managing editor, Jill Deasy's, for more on this. Jill, how feasible is that promise?
Well, Shery, I mean, we know a couple of things about Donald Trump. One, he's been promising that the end of this war is coming for several weeks at this point. I mean, dating back to February when things originally broke out. We saw him saying that something would end in, about 4 to 5 to 6 weeks. Obviously, we're long past that deadline. We also know that 2 weeks, about 2 weeks, is pretty much his favorite sort of unit of measurement there. So obviously, we'll have to see how talks develop to see whether or not that's actually a feasible result. What I will say is that there's a lot of concern over this latest round of strikes. I mean, we've certainly seemed to have reached sort of a break point here where ultimately both sides have agreed to sort of de-escalate tensions, in an effort to get some of these talks back on track. But it's been several weeks at this point even that Trump has really pledged that this is in its final stages of negotiations, and we still haven't seen a meaningful breakthrough. It's kind of tough to see what that ultimately looks like. But again, we'll have to see how essentially the rest of the week develops and whether or not there's any more meaningful progress to be had, particularly when it comes to those U.S.-Iran talks.
At the same time, his approval rating continues to slide domestically, right? Is there an element of risk going into the midterms here? Is there a path to recovery for the party?
I mean, I think at this point that's certainly something that is on the GOP's mind pretty heavily. You've got a lot of concerns over rising oil prices. Trump has repeatedly said, when he's attending campaign rallies on behalf of other candidates for his party, or, what he said in various press conferences, that the price of oil will come down after this war is ultimately concluded. But you do have a lot of those price pressures that are really hitting the domestic economy in the U.S. quite hard. You've got a lot of people sort of heading into those midterms, which again, in November, really not that far away anymore, where they're really concerned about, the cost of fuel in the United States, ongoing inflation, persistent issues there, cost of living concerns. That's traditionally a very, very heavy, sort of topic that is on the minds of a lot of voters in the United States when it comes to these various elections, midterms in particular. Not always a great showing for the sitting president unless they can manage to sort of hold that command on their party. So there's a lot that's going into this election, a lot that's sort of at risk, and a lot that Republicans, more broadly, not just Donald Trump, are ultimately trying to hold on to and push forward with those issues. It's going to be a difficult balance, but we'll see whether or not, again, first of all, this war comes to an ultimate conclusion before we get into November, because, if you still have ongoing fighting, ongoing conflicts, ongoing consistent concerns about gas prices for the next several months, that's a really difficult position for the sitting president to be in.
Bloomberg's managing editor Jill Deasy is there in Hong Kong. Not long now until we get to those November midterms. Well, Chinese President Xi Jinping has vowed to expand trade, agriculture and technology cooperation with North Korea. But Pyongyang's nuclear program was not publicly mentioned during his meeting with Kim Jong-un. Let's bring our China correspondent Min Lo. So tell us about the reception that President Xi received.
Well, it was a very positive one. There was the full 21-gun salute, children jumping up and down, waving balloons. You have the soldiers chanting well wishes for President Xi's health, I should say. Overall, it was very positive, and unbreakable is the term that Kim used to describe the bilateral relations between the two sides, and President Xi as well pledging this unwavering support for Kim Jong-un. But the biggest win for Kim really is the fact that President Xi made absolutely no mention of that nuclear program. And the first time we noticed that was back in September of last year. I was in Beijing during the military parade, which Kim and Putin attended. And that official readout also made no mention of the nuclear program. And analysts are taking this as a signal that China is now lowering the priority of this denuclearization push, and perhaps even going as far as to say maybe China is tacitly accepting North Korea as a de facto nuclear power. And of course, this will have great implications, right, on countries in the region and strategic stability here. And here you can see the front page of the People's Daily. It's a full coverage of this high-profile visit by President Xi, his first trip overseas this year.
As we just mentioned, we didn't hear any sort of public discussion about Beijing's stance on the nuclear program. What do we know?
Yeah, so I mentioned earlier that it wasn't mentioned, and I think this is in some ways a clear sense of a political backing that President Xi is giving to Kim, right? And what this means for the future is that we have an increasingly confident Kim regime. Just ahead of Xi's meeting, we know that Kim Jong-un's sister, his very powerful sister, had stated that the atomic weapons development program is a non-negotiable for North Korea, really setting the red line there. So this really diminishes any hopes of maybe a resumption of those non-nuclear proliferation talks with the U.S. And South Korea clearly is also very concerned, right? They are often the targets of those missile launches from North Korea. We have President Lee Jae-myung, for example, calling for a peaceful coexistence. But so far, South Korea's bid to engage with North Korea has been rebuffed. And in the event of any strategic instability in this region, I guess China will be one of the few actors in the region that can be counted on to have at least some level of leverage on North Korea to rein in Kim Jong-un.
Bloomberg's China correspondent Min Lo there with the latest. And here are some other headlines that we're following at the moment. The Pentagon has accused some of China's biggest companies of supporting the Chinese military, including Alibaba, Baidu, and BYD. They were included in an update to the Defense Department's list after they were withdrawn from a previous version without explanation. The Pentagon is increasingly using the list to restrict companies' abilities to contract with the U.S. military or receive research funding. A U.S. judge has struck down President Trump's $100,000 fee for H-1B visa applications, calling it an unlawful tax. The judge sided with California and 19 other states that sued to block the fee, arguing it exceeded the president's authority and would harm key public sectors. The ruling is a reprieve for tech companies that rely on skilled foreign workers. The administration says it plans to appeal the decision. At least 35 people have been killed after a 7.8 magnitude earthquake rocked the Philippines on Monday. It was the most powerful quake to hit the nation since 1976, and tens of thousands of people have been displaced on the southern island of Mindanao. The government has deployed equipment, pledged funds for affected regions, and suspended classes across Mindanao until further notice. More ahead. This is Bloomberg. Tech stocks are leading the gains in the Japanese session today. We are seeing Tokyo Electron gaining more than 5%. We had seen the Philadelphia Semiconductor Index jumping in the overnight session after, of course, suffering the biggest sell-off since 2020. SoftBank under a little bit of pressure right now. We know that its partner OpenAI has confidentially filed for an IPO with the U.S. SEC, and they're working right now with Goldman Sachs and Morgan Stanley on that potential listing. But it's really to do also with the optimism around some of the comments that Nvidia CEO has put out while visiting South Korea, calling the recent AI sell-off a buying opportunity. Bloomberg Opinion columnist Shery Ren says Huang has given some dangerously rosy investment advice there while visiting suppliers in South Korea and also Taiwan. She joins us now for the latest. I mean, we have heard Jensen Huang make pretty bold and sometimes playful statements. Why would this be so much riskier?
Well, in the past, historically, technological advances often had a companion, basically asset bubbles and the burst. I'm sure Jensen Huang knows very well the trend of AI development, how big it could be, but does he really know about stock valuation? And it does seem like the Taiwanese and some of the Korean stocks have become expensive. And I think it would be wise for him not to, say, lead retail investors on and have them jump into very expensive stocks before losing all their shirts.
Yeah, Korea and Taiwan now accounting for a record 51% of the MSCI EM index. Tell us a little bit about how those valuations could be a risk at this point.
And in addition, three stocks, the two memory chip makers in Korea and the TSMC in Taiwan, they account for almost 50% of the MSCI EM index. And that is just not healthy. But if we look beyond, right, if we look at the TAISEC index, the whole Taiwan stock market, it's trading at over 20 times forward earnings. And that's near par with the US S&P 500. And that's not quite right because Taiwanese stocks, they have a lot of semiconductor companies, tech hardware companies, and they are more cyclical and their earnings are more less visible than the US market. So, and when we come to Korea, I mean, right now we have a big debate on whether the Samsung and Hynix memory chip stocks are in a super cycle. And the verdict is still out yet. So it's too early to say, okay, Samsung and Hynix are cheap.
In the broader AI complex, Shery, I just want your take on that narrative shift from is AI over sort of fear into can funding actually keep up now that we have these huge potential listings. Of course, we start with SpaceX and we now see the confidential IPO by filing by OpenAI and potentially Anthropic.
Well, the hyperscalers, I'm not so worried about them. They have a lot of money and they have all sorts of funding access, right? Like Amazon just issued a record Canadian dollar bond overnight. But when we go down further down the scale, for instance, OpenAI and Anthropic, they're not really going to come to market until late this year, right? Like we're not talking about their IPO in July or August. It could be, October, November. And how about the smaller companies? Do they have funding? We're not so clear, actually.
Bloomberg Opinion columnist Shery ran there. The top corporate stories that we're tracking this hour. Sources say SpaceX's initial public offering is well oversubscribed, with multiple institutional investors placing orders for about $10 billion or more of shares. The company is offering some 555 million shares at a fixed price of $135 each, which would raise about $75 billion. That would make this the biggest IPO ever, topping Saudi Aramco's in 2019. OpenAI has filed confidentially for an IPO in a bid to tap public markets to fund ambitious growth plans. Sources say it's working with Goldman Sachs and Morgan Stanley on a potential listing as soon as this year. We've also learned that OpenAI is planning a tender sale of its shares to provide liquidity to employees in the coming weeks. Amazon has sold 14 billion Canadian dollars of high-grade bonds, the largest corporate debt offering on record in the currency. Sources say investors placed about 28 billion Canadian dollars of orders for the offering. Companies at the centre of the AI boom are scouring global debt markets for funding amid huge investments in data centres. More to come here on the Asia Trade. This is Bloomberg. We'll take a look at the rebound that we're seeing. The Nikkei 225 up by just about 0.9%. This is we continue to see really some of the dip buying come through. The Nikkei 225 in the previous session was about 4% lower on that the tech pullback, some of the geopolitical tensions there as well. But we're really watching closely the recovery of the chip stock revival when it comes to the Kospi up by just about 3.7%. We are off those session highs. It jumped nearly 5% as we continue to see major heavyweights the likes of Samsung, SK Hynix rebound. Some of the other names like LG Electronics, though, travelling in the opposite direction, but broadly all 19 sectoral indexes are on the rise there. We're seeing this KOSDAQ index, the small cap index, also rising by as much as 4%. Here in Australia, though, given that we didn't have trading on Monday on account of the King's birthday public holiday, we are having a bit of a catch down session at the moment, off by 1.4%. Some of the energy names are the ones that to watch given the ongoing concerns over Middle East hostilities, the uncertainty over that ceasefire, Shery.
Yeah, and with the Kospi now seeing that rebound, we'll be awaiting the Taiwanese market opens as well. Of course, those two markets now comprising about 51%, a record for the MSCI EM index. And you can see a little bit of a rebound in today's session, but this was after posting their biggest drop since March. Of course, we had the AI trade unwinding. Right now, we're seeing a little bit of a rebound. When it comes to the currency space, given the rising dollar volatility, we're very much watching those carry trades that are coming under pressure. When it comes comes to Malaysian ringgit, also, it actually fell to a 5-month low in the previous session. Of course, we had hawkish Fed bets, rising political uncertainty in the country as well ahead of state elections. But we have to note that it has been one of the best performers across Asia because of its economic growth outlook. Let's actually head to Kuala Lumpur because Invest Malaysia is beginning today. It's one of the country's leading investor outreach engagements. It brings together policymakers, corporates, and investors to discuss the economic priorities and opportunities in that country. Joining us exclusively is Khairussaleh Ramli, President and Group CEO at Maybank. It's great to have you with us. Thank you so much for your time. I mean, Haidi and I were talking about the inflationary outlook around the world, perhaps this global hawkish turn that we're seeing in central banks. When it comes to your business, what are sort of the expectations that you have given, of course, the impact of the Iran war and perhaps broader pressures on funding and credit costs as well?
Yeah, thank you for having me. Now, just a bit on Invest Malaysia. Maybank has been partnering Invest Malaysia for the last 16 years. And again, our idea is to basically showcase the story about Malaysia. And you talk about how we are looking at the business now, given the environment that we are seeing. At least in the first quarter, we had actually a fairly strong results. Our net interest margin improved by 10 basis points. We managed our costs quite well. It came down by 5%. And credit costs also has reduced as well. And we are actually on the back of having very, very strong capital position as well. For us, we are present in 10 ASEAN countries. And the way that we think about our business is an ASEAN business. We are deeming Malaysia, Singapore, and Indonesia as our home markets. But beyond that, we're also trying to connect our network for the clients that we serve throughout the region.
There are big expectations when it comes to your business and the demand that could come from Johor, Singapore Special Economic Zone. What can you tell us on that front?
Yeah, I think that's. I have been saying that I personally believe in the Johor Singapore Special Economic Zone because of its complementarity views, right? We have presence in Singapore, we have presence in Malaysia, and these presence have been built for 60 years and more. Now, what we have done so far in the last couple of years, actually, we have facilitated financing and investment to the tune of 20 billion ringgit. And we believe that is the biggest amongst all the financial services. And this is across all segments, corporate, the mid-size, as well as on the consumer side. Now, we think that this can only grow further, given that, again, as I said, the complementary factors that Malaysia, and particularly Johor and Singapore have. Now, we have also done quite a bit in terms of facilitating the single family office as well. We have 50% of the family office business so far. In Malaysia, we have done nine as well. So, I think certainly the areas of focus for the Johor Singapore Economic Zone, we believe would help generate further growth for both countries. And in particular, Maybank will be in a prime position to take advantage of that.
Can you tell us more about the rate of growth when it comes to family office segment? And are you also seeing more flows perhaps from the Gulf region with that desire to move funds out of that region and more into Singapore, Malaysia?
We have had, so first on this family office, this would be primarily Malaysian families now. And of course, they have decided to establish the offices in Johor, given some of the incentives that have been given. So the pipeline is good. And yes, I said just now we have done 50%, but the pipeline is good. Now, to your second question, we have also started getting queries from the Middle East, not just necessarily from the family offices, but also from businesses and corporates. And we are now in discussion with them. Of course, the bigger pot is still Singapore, but we have also been getting queries from the Middle East families, particularly directly for Malaysia as well.
Khairussaleh,
How much business opportunity do you expect might come out of that? Because there is a question as to how, I guess, you can turbocharge growth outside of Malaysia, and does that necessarily involve M&A?
It's possible, right? Again, when we look at the services, we've got full suite of services. To your point, family offices are not just for the families, but also their businesses, and they normally have got huge businesses. So we tend to then try to cater to all sides of the businesses that they would like to take from us. So to me, the opportunities are big. But again, I think we have to look at beyond just the family offices. Back to Malaysia, the demand domestically continues to be strong. Maida yesterday actually just announced the approved investment, which was about 92 billion ringgit, and this was about the same amount as first quarter last year. So investment still keeps coming into Malaysia. We are seeing quite a bit of conversion of this investment, and some of them, of course, would go into the Johor, Singapore special economic zone as well.
I think when it comes to Indonesia, it's 13% of its book or so. Are there any concerns around loan contraction in that region, and what are your expectations?
Yeah, I think Indonesia has got some challenges now. The economy is still growing, but the key thing is about how the fiscal position and, of course, liquidity position is being managed. In a way, we are focusing, again, in terms of trying to see how we can still serve our customers there, but, understanding the challenges that are being faced in that particular country. Indonesia, well, good or not, right, it's only about 5% of our profit. So the impact, good or bad, is still not major to us, but we do believe in the medium to long-term prospect of Indonesia being a big contribution to Maybank in the future.
When it comes to long-term prospects, of course, the digitalization of financial institutions will be key. And we know that some of the Malaysian banks are actually the least cost-efficient when it comes to Southeast Asian financial institutions. How much are you doing in order to perhaps use artificial intelligence and digital platforms in order to improve your business? And what are your goals right now in terms of business upside?
Yeah, I think in our Raw 30 5-year strategy that we launched in January, we actually have publicly said that we're going to invest about 10 billion ringgit in the next 5 years to focus on upgrading our platform to make sure that we are ahead in terms of doing AI, etc. Now, from an AI point of view, again, we are trying to equip all Maybankers with the capability to do AI on their own. Apart from us focusing on certain businesses that we believe will be in the forefront for us. So in our Raw 30, there are 4 areas of business that we're focusing on. One is Islamic banking. We think that we have got opportunity to be a global leader there. Secondly is in corporate investment banking. We are doing well regionally, and we think that we can continue to be a leader in ASEAN. And similarly for wealth and even for transaction banking. So as we focus on these 4 key business areas that we want to position regionally and even globally, this is where then capability of AI can be augmented to even amplify the growth. I can say that, for example, wealth, we grew about 35% in wealth fee in the first quarter year on year. And we are now also augmenting our people in AI, particularly the relationship managers, to be able to serve our clients more effectively. So that is an example of how we are using AI to supplement our business and assisting our relationship managers in particular to be able to serve our customers more effectively.
Khairussaleh, really great to have you with us. Khairussaleh Ramli there, Group CEO at Maybank. We do have more coming up from the Invest Malaysia Summit taking place in Kuala Lumpur. We'll be speaking with Bursa Malaysia CEO on the country's growing IPO market, plus catch our exclusive conversation with the head of CIMB Group on how AI could impact its workforce, Shery.
And take a look at how Japanese assets are trading at the moment. We're seeing a little bit of a rebound led by those tech stocks, not surprising, given the overnight session that we got from Wall Street as well. And the Nikkei now gaining about 0.25%, paring back some of those earlier gains, but still we're seeing some upside. The Japanese yen still stuck at that 160 level against the US dollar. And hedge funds, the most bearish on the yen since 2024. And that was a time when the yen broke 161 and authorities had to intervene. In fact, Finance Minister Katayama coming out right now saying that there's no change in their stance when it comes to being ready for any bold FX action, Haidi.
Yeah, let's take you to New York City, where President Trump has headed today to attend the New York Knicks game this on Monday evening at Madison Square Garden there. President Trump attending Game 3 of the NBA Finals as the New York Knicks host the San Antonio Spurs. Of course, there's been lots of security concerns related to the president's attendance, I should say, perimeter being established around Madison Square Garden, and there's been heavy security at entrance as well. The president's attendance comes despite his strained relationship with the NBA. He's previously criticised the league and its players over social justice initiatives, taking positions on political issues, but we know that the president is a long-time Knicks fan. He's there as a guest of Jim Dolan, who's the CEO of Madison Square Garden Sports Corp. We did have the national anthem earlier, a pretty negative reaction from the crowds to President Trump with some booing there. Of course, we know the president's approval rating has slid to pretty much the lowest out of either of his presidential terms as the war in the Middle East continues and gas prices continue to pressure the cost of living for Americans. We'll leave it there. But coming up, Australia's right-wing One Nation party edges ahead of Labor in a news poll as Prime Minister Anthony Albanese's ratings hit fresh lows here. The result mirroring a Redbridge survey from last week. Redbridge Director for Strategy and Analytics, Samaras, joins us next for Australia Ahead. Australia's populist One Nation party has surged past the ruling Labor Party to lead a nationwide opinion poll for the first time, reflecting a broader rise of the right-wing populism seen in the UK and across Europe. The result underscores voter dissatisfaction with last month's budget and signals growing fractures within the Conservative side of politics. According to a survey from Redbridge Group and Accent Research, One Nation's primary vote advanced 4 percentage points to 31% from a previous poll conducted in May. Joining us now is Samaras, as a Director of Strategy and Analytics at Redbridge. Coach, really great to have you with us. And I think we last spoke to you in the wake of the last federal election. At the time, there was a real sort of reflection that Australian voters were perhaps too sensible to veer too much to the right, and that was why the coalition had failed in its campaign strategy. So what's changed since then for the shift to be this apparent, and do you think that's going to hold?
Yeah, we've seen a trend that's similar to the trends we see in the UK and the US and parts of Europe as well, and that is former Conservative voters moving to a right-wing populist alternative, largely in regional areas, but overwhelmingly in areas where there has been significant economic decline. So the change from the last federal election is that obviously One Nation has grown exponentially, and it's been largely at the expense of the traditional Conservative Party here in Australia. And now they are beginning to eat into the ruling government, the Labor Party, and its constituencies as well.
Do you think this is likely to hold going into the next election and really build up momentum? And is there a sense that MAGA-style politics, and we know that Pauline Hanson herself, has spoken at CPAC at Mar-a-Lago and has been broadly supportive of the US president's policies. Do you think that is really going to take root in Australia?
A version of it, yes. I think what we are witnessing here in Australia is a definite realignment and restructure of our democracy, and that is particularly on the right side of politics. It's, as I touched on before, it's largely within constituencies that are experiencing significant economic personal decline. And unless the economic situation for these Australians changes, I don't think we're going to see much of a change in terms of the trajectory, and that is that One Nation will be the largest Conservative political force in this country going forward.
As you mentioned earlier, I think obviously part of this came from kind of the existential implosion of the coalition and the Liberal Party, right? Is there a chance for a regathering of that, or do you think perhaps that could come from a more centrist party? We're hearing of perhaps some of the Teals coming together to form a new party.
Yeah, that Teal alternative appeals to a different type of Australian, largely in our large urban environments, very similar to the sort of the Democrats in the US in terms of the sort of constituency that they find a lot of traction with. So I think the alternative for One Nation, really, in terms of if we see a decline in their support, will be largely at the benefit of the Labor Party if it's able to actually pitch into some of those regional constituencies, which they are presently losing ground to as well.
Where can Anthony Albanese as a leader make up that ground that's been lost? We've seen him caving and vowing to address migration issues, for example. Do you see other policy changes? Do you see any walkbacks when it comes to this, what seems to be a deeply unpopular budget?
Yeah, the budget really affects a particular constituency that still is voting for the traditional Conservative Party, the Liberal Party here in Australia. Really what the Labor government and the Albanese government needs to do is focus on those outer suburban regional constituencies which have a history with the Labor Party and who they are losing ground to One Nation at the moment. And again, it all boils down to the economy and how well these particular Australians are travelling. So if the Labor government is able to hold back this tide, they will need to actually do something which, of course, in my opinion, in the UK, the Stamer government is not doing, and that is addressing a sense that the country is heading in the wrong direction and there's no solution with regards to the economy.
Global thematics at play there, whether you're talking about America over in Europe or here in Australia. Cos, always great to chat with you. Cos Samaras, who's the Director of Strategy and Analytics at Redbridge. We do have more on Australia ahead every Tuesday at 10:40 a.m. if you're watching here in Sydney, 8:40 a.m. if you're catching us out of Hong Kong. Plus, you can tune into the Bloomberg Australia podcast, which delves into the biggest stories shaping the country's role in global business. You can find that on Apple, Spotify or Bloomberg.com. More ahead. You're on the Asia Trade. This is Bloomberg.
Take a look at how we're setting up for the market opens across China in just a few minutes. We are seeing a little bit of a mixed picture, but when it comes to Taiwan, given those incredible gains that we're seeing in the Kospi right now, we are seeing futures also pointing to some upside. In fact, the Kospi and the TAIEX taking up about 51% of the MSCI EM index. That's a record and really a lot to do with, of course, that AI optimism, the exuberance around the AI build out. In the last few days, we had that downside. Interestingly, mainland Chinese stocks have held up better than other perhaps tech-heavy indexes over the past week. We may, though, be seeing under the hood signs of strains starting to emerge. Bloomberg's managing editor for Asia Equities, Lianting Tu, joins us now from Singapore because, Lianting, at least when it comes to the onshore stock market, it's been relatively resilient during this AI sell-off. So what's going on?
Yeah, it is. On the surface, yes, it does seem relatively resilient compared with the other North Asia peers. But under the surface, the picture is less reassuring. If you look at the overall sort of concentration, the market in China has becoming more dependent on a number of stocks. And we have some estimates showing that 5% of stocks are actually driving 40% of trading activity. So that's really concentrated. And the market breadth is actually deteriorating as well. More stocks are falling rather than rising. We have fewer stocks hitting new highs, and only about a third of stocks onshore are right now still above their 200-day moving average, down from 80% earlier this year. So as you can see, overall, it looks relatively resilient for the CSI 300, but market participation into this rally is definitely shrinking.
And Lianting, so how does it compare to past market events such as perhaps the 2015 stock boom in China?
Yeah, there's definitely some echoes with the past market mania. Some fund managers are drawing parallels with the 2015 Internet Plus rally. Today's AI rally does share some characteristics, right? We have strong narrative, we have crowded positioning, and also rising valuation. What is notable to me is the trading activity is really concentrated around a few stocks. According to CITIC Securities note, about 10% of the top stocks are driving about 60% of turnover, and that happened in May. So yes, I think just if you look overall, this does not mean market may crash anytime soon, but it does mean that the market is more vulnerable and to any kind of disappointment.
That was Bloomberg's managing editor for Asia Equities, linking to that vulnerability to disappointment, the, I guess, resilience of this rebound rally are really some of the themes that we're watching for as we continue to see that bounce, in particular when it comes to the Korean market with some resilience there, but Japan perhaps a little bit more tepid. This is what we're watching as we get market opens across Hong Kong, mainland China. Of course, key will be the Taiwan market as well in the next hour. Watching AI data service and data infrastructure stocks could see a rise. Beijing releasing a plan when it comes to their AI data development ambitions across key industries. The Pentagon has added some of China's biggest companies to its military-linked blacklist, including Alibaba and Baidu. That could trigger further restrictions, including barring the companies from US military contracts and funding. We'll be watching some of those names in the session.